Good morning, everybody. Thomas is here. We're going to talk about briefly what occurred last night and what is driving the markets currently and where I believe the market is most likely headed today. Okay, so we're looking at the ES, which is the S&P 500 futures. Let's go back to the daily chart here. So yesterday, and that's the previous video, last night, we looked at this candle right here and we said that it started to look kind of bearish, but if it could hold this level right here, then we might go bullish. Okay, now I wasn't so sure if bulls was going to step up, because usually when it runs this much, typically you see it take a break. Okay, so I was expecting a pullback, if to at least right here, and we didn't get the pullback. We got a slight pullback, but we didn't get a full pullback. Bears just could not step up. And honestly, I would have liked to see it come down here, because that would have been a great opportunity to buy. Okay, we want to buy the dip. This would have been a great opportunity to buy right here, but that did not happen. Matter of fact, when we look at the hourly chart here, we can look at what actually occurred overnight. So we see it did drop, but the moment it hit this moving average right here, which is the 30-day moving average, by the way, Bull stepped in hard and bought that dip right up. So we can see that the bullish sentiment is extremely strong still, and they did not. The bulls, they did the thing. They defended their position. Okay. So if bullish momentum is to continue, where do I believe it will most likely go today? If it is to continue to the upside, well, I believe potentially, and I'm going to be conservative because, let's go to a bigger time frame here. Let's see where I think we can get to today, if bullish momentum is to continue. So if bullish momentum is to continue, I believe we can get back up to around 42.50, and that's if we don't take out 42.60 completely. If we don't go ahead and take out this entire level up here. So I'm going to draw my range, my target range for the 42.50 to 42.60 area, and that's been conservative because it can blow through that. It can blow through this range, guys. Okay. If bullish momentum is to continue, but if bears step in, because like I said, if bears continue to step in, and honestly, I doubt that bears are going to be able to push it down. There's too much bullish sentiment, but this is the markets. You never know. If bears do step back in again, I think we revisit this 4207 area again. We retest it to see if it can hold up again. So this is the areas that I'd be watching on the ES today. Right? And mostly, guys, hold on real quick. Let's go. And mostly, what I'm watching for, it's going to be based on several things, but I'll address that here in a bit, real quick. Same thing with the SPY. SPY follows the same patterns. ES. SPY is ES. ES is SPY, but SPY is the stock version of the ES. Okay, so SPY is the ETF or stock that represents the S&P 500. For those of you who do not know. Okay. So we go back to the SPY here. Now, just to recap from yesterday, we started turning very bearish right here. Okay, and I expected it to drop down to the 415 range, but in the overnight session, as we can see, that did not happen. Okay, in fact, we see that the lowest spot drop after hours was 419. Okay, and just as like the ES, the bull stepped in and did the damn thing. And what if ES pushes to the levels I'm expecting, then I still believe we will see this push past 424. I believe that if ES is bullish today, we will see this go past this 424 right here, at least come back and revisit it and retest it. Okay, so I'd be targeting this area again. You know, the ultimate goal target is I want to see it touch 426, because 426 is going to tell us if we are in bull mode or if it is a fake out, right? That's really what we're watching for. We really want to see this 426 level tested, guys. It's important. It's a key level. We really want to see it tested. What we don't want to see, or maybe we do if we're perma bears, is this 410 level taken out. Okay, but if we're bullish, or if we're looking to see the market go back on a crazy bull run, we need to see this 426 level revisited. Okay, moving on to NASDAQ. So this is NQ, the NASDAQ futures, guys. Now, as you guys can see, we came really close to this 13,600 yesterday. Really close, but we couldn't quite make it. Stellar stepped in hardcore. Okay, Stellar stepped in strong. So they pushed it back down, and once again, I expected the bears to step in during the Asia session and push it down, you know, for a pullback. And it did pull back. They did pull back, but they didn't pull back quite as much as I would have expected. You know, I would have thought they would have pulled back to at least right here, but bull stepped in and defended in this area right here, this 13,300 area, which, like I said, is surprising. Right now, looks like the sellers are retesting again, and we may get a push down. It's looking like we may get a push down, but you know, you never know. Bulls may be stepping and defend. Okay, now for the most part, guys, I believe that what's really holding the markets up right now is, number one, the S&P 500 is heading into its fourth week of upward momentum, right? We're heading into the fourth week of positive territory. So, you know, this is the weekly chart, guys. We got 1, 2, 3, 4. We're working on the fourth week of positive territory, which is the longest streak of green we've seen since November, which is crazy bullish reason, fundamental, which is a crazy reason to be bullish. It's not crazy, but it paints the narrative that the bottom is in and the market is now reversing, and you know, we're heading into another bull market, right? So it's giving confidence to investors. Okay, so that's part of the reason we're seeing this momentum push, this bullish push. Okay, another reason we're seeing so much bullish momentum is because the economic data, the CPI and PPI numbers are better than expected, and it is giving investors reason to believe that the Fed may be able to slow down interest rates. Okay, slow down the pace in which they are raising the interest rates, which, you know, is giving investors confidence to go into a risk on mode, right? Because when the Fed lowers interest rates or slows down interest rates, then assets like tech, etc., you know, they they go up. That sector goes up, right? So we're currently in a risk on environment, you know, a de facto risk on environment, like a pseudo risk on environment. Personally, I don't think we're fully there yet. However, if we do break this 13,600 level and close above it in the NASDAQ, and if we close above that 426 level in SPY, and I believe that that may be a strong sign that we are in a risk on environment, which in that environment we'll see Apple under a risk on environment, guys. We'll see Apple take off most likely back up to 180, okay, and maybe even take out all these highs over here, right? So that's something to be expected if we are truly in a risk on environment. So today, what could threaten my bullish sentiment and that could put a damper on the bullish sentiment is if the University of Michigan Consumer Sentiment Report is negative, right? So all eyes are currently on the UOM Consumer Sentiment Report, right? Which basically tells investors how consumers are feeling about the economy. Do they have the confidence to continue spending, or are they contracting and putting their money, you know, in their savings or what have you, right? It's an important piece of data. So if consumer sentiment is negative and they believe that the economy is about to go in the crapper, well, that's bad for the markets, right? That's a warning sign that people may need to sell some positions, take some profits, or what have you, and pretty much protect their portfolio. On the other hand, if consumers feel that the economy is in good territory or improving, then that's a sign that it may be a good time to start buying more assets, right? So we'll see the markets reflect said sentiment. So that comes out today at 10 a.m. So to be honest, if as far as the markets are concerned, I won't be making any moves until after this report comes out, and then based on the report and its impact on the markets, then I'll choose a side, right? But for now, based on just the technicals, based on what's going on in the charts right now, you know, this is looking kind of bullish here. Now, if you are the type of person who wants to get in before that report comes out, then as long as this level holds up right here as long as 13.35 is held strong, then that's bullish. If this breaks, chances are it's going to come down. You know what I'm saying? You can possibly get a quick 50 point, you know what I'm saying, 20 point from where it's at, 13.33 to 13.10. Get about a 20 point drop or whatever. You know, you can get a quick scalp in, but honestly, the best way to play this, guys, is to wait till 10 a.m. and wait to see which way the market moves. Okay? So with that being said, that's all I have for you this morning. Any questions, comments, or concerns, please let me know. And be sure to like, subscribe, and share this video. Okay? Alright. I'll see you guys this afternoon. Let's get it.